Good evening, option traders. Sam the Trader Geek here on a Wednesday hump day, January 15th, 2025, with your option review and market review. Hope you had a great trading day, and what a trading day it was. So we can see that lots of green on the screen, and other than the VIX down 13 and 0.8%, and the dollar being a little down, everything was up with the lead led by the ARKK up 4%. That's Cathy Woods. Magnificent Seven up about 3.6%. Bitcoin up about 3.3%. And even the small caps and micro caps participating today. How about that? But yeah, green all around, and a good bounce back day on better than expected consumer price index data. You can see here that a little more closely with the Qs up 2.26%, the SPY up 1.82% on the day, the Dow up 1 2/3, and small cap growth really looking good. And there's the ARKK. But what's not as impressive is the closing range. And I like to see this on a big strong day like today, where we had 4-to-1 positive and negative breadth. I like to see this at 90% or better. But this isn't bad. But look at the ARKK, closed in 42% of its range, and small cap growth 35%. So it wasn't that impressive. And if we come over here to look at the industries, lots of 1%ers for sure, but on a day like today, I would have expected to see more 2 and 3%ers and not so much just 1%ers. And well, that's cannabis. And staples was actually red on the day. And you can also see the fade from the open on a lot of these industries, quite a bit of red, especially with well, the two worst from last year are continuing their losing ways, cannabis and solar. And then you can see that on a 5 and 20-day basis, cannabis is not doing any better, 50 days, 48% down. But not to take away from a pretty good day, but we need some follow through. I'm not sure that an 80% up day is going to cut it. We need another one like that to say we're kind of out of the woods. We can see here that breadth improved over the 5-day period based on today's up day. And so we'll have to see if we get some follow through yesterday, or we continue what's been happening is up, down of late. Taking a look at the charts and looking at the SPX, we can see here that we got up to the options implied expected move on the week, 59.45. And that's kind of where we stalled. And it also happens to be right at the 50-day moving average, which is around 59.58. So 50-day moving average holding us down. If we get a gap up tomorrow, then that will take us through the 50-day and perhaps this parabolic stop and reverse volatility stop. 59.81 is where that needs to be in terms of a close. Excuse me. And then we'll probably have more highs, but we are in a high resistance area, and I would be surprised if we get much past 6,000 before we take a rest here. We used up a lot of energy today, but we can see the MACD is trying to curl up and turn positive, but we got a ways to get above the 0 line. The relative strength popping up to a 50 level, and you would have expected, we're down at the 40 level for the RSI, and that we would be expecting a bounce. We never got to the 30 level, which is very oversold. Taking a look at the NDX, a little bit messier chart here. Again, the options applied expected move here is about 21,379. This week we have a 532 expected move on the NDX, and we're just a little bit away from the upper edge of the expected move. And we did close above the 50-day, and that's a good thing for the NASDAQ after really a big pullback so far. I'd like to see more follow through on this to tell us that we are out of the woods. And hey, we've got a holiday coming up, and that's usually bullish, where Monday the market is closed for Martin Luther King Day, and we have an inauguration. So we could conceivably um, rally into the holiday. But we do have quite a bit of resistance up here, so it's not going to be smooth sailing. And we also have a monthly options expiration, and it's an annual leap expiration on Friday. So that also introduces choppiness and volatility as market makers and other institutions roll out their options, long-term options from this year to next year. So count on some funky moves over the next couple of days as we get into expiration, and there'll be an expiration at the open on Friday and then an expiration at the close. So our expected moves take into account the closes, not just the openings for Friday. Taking a look at the Russell, as I mentioned earlier, looking good, but kind of a topping tail here, kind of a spinning top, if you will, for today. It looked really strong, but then it started to get sold. You can see here there's a parabolic stop and reverse here at 22.78. If we can close above that, then there's more room to the upside. You can see the MACD on the daily is trying to flip up. And we closed exactly on the options applied expected move. 28 to 59 is there. Oh, not maybe not exactly. We were up about 4 points. So the significance of the options applied expected move is this tends to be defended. This is where the majority of the options have been bought or sold for this week, and these levels are usually defended, and if they're exceeded, then dynamic hedging with futures and or other shares of stock for market makers to defend their positions. And that's why these moves are significant. And we expect to stay inside the options implied expected move about 68% of the time, 68.2% to be exact. That's one standard deviation for the statistic geeks out there. Taking a look at our expected move for this week, we had 118 points as the expected move for the entire week. And as I mentioned over the weekend on the video, that's not nearly enough for a week with CPI and PPI and all the rest of the earnings coming in, the bank earnings coming in better than expected today and yesterday. So we're looking at some good results, but when they lower guidance, what do you expect? These companies are going to end up beating that lowered guidance. That's the game they play on Wall Street, and nothing we can do about it. Through Friday, we have about a 56-point move into Friday's close. So not quite half of it. We have 2 days left and 55 points left. I would bet on the over on that part. And you can see here we have an expiration on Friday morning, which will also introduce some funkiness into the open for as institutions jockey for position and defend their positions in that closing option period. Taking a look at the VIX, and first I'll go to the VIX chart. That was down, as we saw earlier, about 14% today, 13.84%. Here's the daily chart. MACD is starting to immediately turn down. It's we barely got into the 20s for one day. We didn't even close up there on Monday. We closed at 19. We got up to 22, and here we are back at 16. So as soon as volatility catches a bid, they sell it off. But that's good for the bulls and the longs here. So it shows you that they're willing to jump on and sell volatility as soon as there's any sign of any bid in the market. If we look at, however, what's going on here with the options. I always like to go out to the next monthly expiration, which is 19 February. And we close at 16, let's call it 16 and look out $1 out of the money. That's the 17s calls. They're priced at about, let's say about $1.69. If we go out $1 out of the money on the put side, that'd be the 15s. Those are priced at 45 cents. So roughly 3 to 1 on the call side. So that tells me that the bulls used up quite a bit of energy today, and they are reaching for some of the VIX calls or the SPY puts or SPX puts, given that this is 3 times as expensive as these, because a couple of days ago, it was the reverse situation. So while 3 times the price for the calls versus the puts is not significant, it does tell me that they're not leaning on the price of the puts as much anymore and more leaning on the call side. And that doesn't mean we can't continue to go up. It just tells me that we used up quite a bit of energy on the rally today, and there was no shortage of hedging going on under the behind the scenes. With that, let's take a look at what we have on the economic calendar. And here we go for tomorrow, our typical initial jobless claims at 8:30 Eastern. We also have retail sales. That's a market mover, import prices, Philadelphia Fed as well, and business inventories and home builder confidence. Who cares? On Friday, we have housing starts and building permits. And I think we have industrial production and capacity utilization. Coming up as far as earnings, we have Taiwan Semiconductor in the morning, United Health Group, Bank of America reporting, Morgan Stanley, more of the banks and financials, US Bank Corp, First Horizon, PNC. I mean, this is the week of bank earnings, of course. And then after the close, we have another bank, Bank of the Ozark, and also Transport, JB Hunt. Coming up Friday, we have Slob, or the old Schlumberger, with Regions Bank's Fastenal and Citizens Bank closing reporting on Friday. So with that, let's take a look at our option plays and call it a night. So let me flip over here and switch to the chart. And that's not the one. All right, had to pause the video there. Sorry about that, to take care of a sneeze attack. And we're back to it. We've got the options plays that we have, starting with Apple, finally catching a bounce off this 100-day moving average, or so it would appear. And we are under the 50-day. We had a nice rally today, up about almost 2%. We were a bit early, of course, on our calls. We're down 50%, but we have until the end of the month, and these will hold their value pretty well from a option decay standpoint. But we are down 50% on this, but we still have plenty of time. And if Apple is going to have an earnings run, we are going to be able to participate in that. AMAT, we took another price target on that one. Gapping up and closing above the 50-day. Like to see that. MACD is still solidly positive. And on the weekly chart, we can see it's under the 21 EMA, but the MACD on the weekly chart looks like it wants to flip back up. So we took another profit target on this one. We're up. It's really a double so far for us, and our next price target is $7. So AMAT rewarding us for our patience. It certainly didn't make it easy, but looking like it's getting back in gear. Amazon, a new trade we put on this week, and we're up just shy of 20%. Our first price target is 850. So that if we get a gap up tomorrow, then we should be able to get our first price target, which is only plus 25%. And given this environment, I'm looking at starting with 25% instead of 50% profits on some of these options until volatility stabilizes. You can see we closed above the 21, the 80 MA, and then we got a parabolic stop and reverse here. We can close above 227, then we can go back and attack this old high. And we can see that we didn't pull back that much from the 233 all-time high made back on December 16th, but it has been a choppy mess so far. But again, our play is kind of a run up into earnings, if you will, to try to capture that if indeed Amazon is going to do that. Looking at the weekly, it's just kind of like a bull flag here, kind of coming in for a slow landing, looking still good, but potentially MACD wants to flip over while the daily wants to flip back up again. Baba, our disaster du jour. It actually wasn't bad today, but up 76% is not impressive. Living under the 200-day. This is our second bite at the apple. The first one didn't work out, extended out to this one, and this one is not working out so far. And if it doesn't work out for us, then I'm going to throw my hands up because these Chinese stocks can't seem to hold a bid for whatever reason. But we'll hang in there. This is for March, and we got a lot of time. Our stop is at 78.50. That's a closing stop. And hopefully Chinese stocks can get in gear for us. And here's another one that kind of surprised me on a day like today. Salesforce couldn't hold its rally, and it's kind of turned back at the 21 EMA. We do have a parabolic stop and reverse at 333, but we're a ways away from there. We hit 331.50 today, and like to see this MACD start to curl up and flip over for us. So maybe it was a sell into strength type of thing, but we shall see. Holding the 21 EMA on the weekly, 1, 2, 3, 4, working on our sixth pullback week since the all-time high up here on the first week of December. So CRM not really looking very impressive, but we'll give it some time. We are down about 100% on this. It was looking a lot better this morning before the selling came in on this one. And this stock seemed to be emblematic of a lot of stocks that were on my screen that just weren't participating in today's rally. And even though it was 4-1 positive, I saw quite a few stocks that were just struggling to be up even a buck or 1%, which you would have expected more on such a seemingly strong day. FXI managed to eke out a gain today. We have a short put on this one in February. We're up a whopping 6%. We have time, and this is why we sell puts, because we're kind of agnostic as the time. The more time that goes on, more decay happens. We just don't want it to threaten our short strike, which is the 29 put, a 29 level. We bottomed out here at about 28.65, and we're bouncing again. So hopefully these Chinese stocks can catch a bid. Grab is our little spec play out. We bought April calls, cheap calls, and 70 cents. And I've got a stop set at $4. If we close below $4, we're exiting. And quite frankly, those options will probably be priced at 5 to 10 cents, and probably not worth closing, but we might just salvage that value anyway. Pure spec on this one, not really showing any strength that I expected and the positivity I had for this name. But it is a spec, and we'll see if it can garner any strength and reward us, at least get up to the 50-day. Not that that means that we'll get back to profitability, but maybe back to even. Intel, another struggling stock that we're trying to catch a turn on, and that's the problem with catching a falling knife. And I do a few of these where I see signs of support and reversals in momentum or divergences in momentum. We are down 135%. It doesn't mean a whole lot because we sold a put to finance the purchase of a call spread. We have time until February, so I'm not terribly worried about it, but it would be nice to see Intel catch some sort of bid. But when the big boys are running, they pound the last year's losers, and that's what's happening here. J&J, another one that is trying to rally off the 140 bottom today, couldn't show much strength, up 22 cents, big deal. This is a play that we have into April. We're down about 40% on this play, but J&J should get into gear, but staples have just been weak. In fact, it was the only weak negative sector today on the board. So we're seeing weakness in consumer staples, despite the bonds yields coming down today. So it's kind of weird, but it was not a defensive day. So you would expect the staples to be sold, but they've been sold for days and weeks now. NVIDIA, we took our covered call and extended it out once again to February. So we bought shares and we sold the December 140 call, and then we sold the January 140 call, and now we're into the December. So this is turning into a nice little income generation tool. As long as NVIDIA holds up, we can make more than the initial 5% that we had max profit possibility. So if we look at where we are right now, yeah, we're about at 4%, not knocking the doors off, but not taking a lot of risk. And if NVIDIA can get back above and close above the 140 level, then this will turn into a nice little trade with not a lot of anxiety or stress over it. PFE, here's another one that just can't seem to find its footing and get going. We get up to 27 and a half, and then we start pulling back again. And this is one that is grossly undervalued, but we can't even get a first price profit target at 50%, which is why now I'm looking to try to get first price targets at plus 25%. Hopefully it will hold the 50-day here and we can see some profits on this. This expires in March. We do have earnings that'll be coming up in a few weeks. So we'll have to make a decision whether we want to hold this or not, but chances are it's going to be a not, given that it's not showing any strength pre-earnings at this point. Palantir, we have two plays on this, and conceivably they could have been combined. Having a nice day, or at least holding above the 50-day. We opened up at 68.55 and rallied about 30 cents and then closed right at 68.14. But this January 31st bull put spread expires at the end of January, and we're down about 11%, plenty of time. And we got nowhere near the, well, I guess we did. We got to 65 level, and hopefully now that we're above the 50, we can get a curl up in the MACD and do a little rallying on this. And that would be good for the call spread that we have. And so we have harvested 2 profit levels on this last tranche we have, or the next tranche, I should say. We're down about 47%, but we did take some nice profits before PLTR pulled back. And my opinion is that what was strong last year can continue to be strong this year. And as demonstrated by Intel and PFE, Pfizer, the weak ones continue to be weak. They're just not getting bought up. So it's nice to have some of these strong ones, and hopefully Palantir can get back into gear. Silver, we have a put sale on this one. Doing well. We are at about 80% profit. Going to be looking to either close this out or roll this up. We're very close to the 5 cent target. In fact, I should check if we hit it today or not. That was a March 24 put. And yeah, we did hit the 5% mark, 5 cent mark today, but silver's acting good. Oh, I may just roll this out to another silver put and keep this going since it's looking good, close above the 50-day. And if the precious metals want to rally, we can sell another put. Our big winner today was the SPY back ratio. We sold one at the money call and then bought two out of the money calls. And with the SPY rallying $10.59 today, we really blew that spread right out in the first day of this. So that doesn't always happen, but that was my hope when I put this trade on yesterday, that we'd get a wild and big move. Otherwise, these kind of plays don't work very well. And today it worked out very well. And we took a few price targets here and quadrupled our money on the second and the third profit targets that we took. Our next profit target is 3. I would be careful not to let this get back to break even, which is 50 cents credit. And let's see if the market wants to continue. We have a parabolic stop and reverse here at 595.73. So close above, let's say 596. And we could find ourselves trying to head back to new all-time highs. I don't think we get there anytime soon, but stranger things have happened in this market. We can probably get to this level here of this red candle on FOMC day in December. That could be something that we see, but getting to and above all-time highs, I think that's a tall order for now, especially with a lot of regretful owners in this range. TLT finally having a decent rally other than just, a few pennies. MACD is trying to turn back over. I think January is going to turn out to be okay for the long bonds here. But we have 2 plays. We have like Palantir. We have a call spread, which is up 22%. And we paid $1.74. So our first profit target is about 260. And if we see any continuation of strength, we should see that profit target tomorrow. And hopefully the bonds have found a bottom at 85 and can rally at least to the 50-day, say $90. That would be a nice profit target. And you can see that that's what we're targeting in terms of our spread. We also have the short put in March, the 82 put, which went into the green today. We're up 12% on that. Long way to go, but it's nice to see the bonds finally participating, and hopefully we'll get some follow through on that. Our final trade here is on Tesla, kind of rallying almost $32. That's 8%. It was a big move today. So we're back in the game with this one. We have our next profit target at 26. And I almost took this one off based on this pullback, but I'm glad I didn't. So we're up 339% on this particular play. And our next price target is 26. We're at 22.53. We already took one profit target. Hope you're still in this one. My one regret this week was closing MSTR too soon. And MSTR had a pretty good day today. So that was kind of a bummer that we pulled this off. And if you still had it, hopefully you were able to participate and take some more off at a higher price than we did closing it. In any case, that's all I have for you tonight. All I can say is anything goes in this market with retail sales tomorrow and the jobs report. I don't think reversing this entire move is in the cards, but I also don't think that we're going to scream back to all-time highs. So be careful out there. You have a monthly and yearly options expiration, so that's going to create some volatility and some choppiness. And I would be quick to take profits on stuff because this is not last year's market. At least it hasn't proven so. And we are still under the 50-day on the SPY. So caution is warranted. If you have any questions for me, Trader Geek Sam in the forum or at Trader Geek on Twitter. Thanks for watching, and I will see you in the forum tomorrow. Take care and have a great night. Bye-bye.